Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. There's a common misconception that removing zeros from a currency, commonly referred to as deleting the zeros, is the same thing as changing the exchange rate of that currency in a favorable way. This confusion has been especially persistent in discussions around the Iraqi dinar, where many hopeful investors and observers interpret news of redenomination as a sign that the value of their holdings is about to increase. However, this interpretation fails to understand the fundamental differences between redenomination and a revaluation or appreciation of a currency in the foreign exchange market. In reality, when a country deletes zeros from its currency, it is engaging in a redenomination, a technical and accounting adjustment that simplifies the face value of the currency but does not inherently change the actual purchasing power or the underlying value of that currency on the international stage. To understand the full implications of this distinction, one must dig deeper into the mechanics of monetary reform, the rationale behind redenominations, and how exchange rates function in the global economic system. Redenomination, at its core, is a process by which a country changes the nominal value of its currency units without altering the actual value of the currency itself. It is usually undertaken by governments or central banks in response to prolonged inflation or hyperinflation, where the value of the currency has deteriorated to such an extent that everyday transactions become cumbersome due to the high number of zeros on banknotes. In such cases, a country might issue a new series of banknotes and coins with fewer zeros, replacing old ones at a fixed ratio. For example, 1,000 old units for one new unit. The goal is to simplify financial transactions, make accounting more manageable, and signal to the public and investors that monetary reforms are underway. However, this process is entirely neutral in terms of the currency's external value unless accompanied by structural economic changes or monetary policy shifts that influence supply and demand for the currency. The proper sequence for a country that wishes to strengthen its currency and reflect that strength through redenomination is first to change the underlying fundamentals or adjust the exchange rate through central bank policy. Once a stronger currency is in place, meaning either that the exchange rate has appreciated or that inflation has been brought under control, a redenomination can follow to reflect the new reality. In this framework, redenomination is the final step, a symbolic capstone to successful monetary reform. It is not the beginning of value creation, but rather the end result of it. Therefore, if one is hoping that the deletion of zeros will lead to a windfall, they are putting the cat before the horse. The real hope should be pinned on changes to the exchange rate, supported by broader reforms in Iraq's economy, governance, financial institutions, and global trade relations. A revaluation, in contrast to redenomination, is a deliberate upward adjustment in the official exchange rate of a country's currency relative to foreign currencies. This means that each unit of the currency now buys more foreign currency than before. Revaluations are rare and typically only occur under fixed or managed exchange rate regimes where the central bank decides to adjust the peg. In floating exchange rate regimes, currencies appreciate or depreciate based on market forces. For Iraq to revalue its dinar significantly upward against the dollar, the Central Bank of Iraq would have to change its monetary policy framework, reduce the money supply, or back its currency with stronger reserves or assets. Alternatively, market confidence would have to surge based on macroeconomic fundamentals such as rising oil exports, diversified industrial output, foreign investment inflows, or political stabilization. The process of monetary reform is long and requires careful coordination between the government, the central bank, and international stakeholders like the International Monetary Fund, IMF, and the World Bank. Iraq has been undergoing discussions and consultations with the IMF for years as part of its effort to modernize its financial system, develop its banking infrastructure, and implement anti-corruption measures. These are the real indicators that one should watch when assessing the likelihood of a currency appreciation or structural transformation in the Iraqi economy. The deletion of zeros, if and when it happens, will be a sign that these deeper reforms have succeeded. But by itself, it does not change the currency's external value. To make an analogy, consider a company that performs a reverse stock split. If a company's stock is trading at $1 per share and it performs a 1-4-10 reverse split, shareholders will now own one share for every 10 they previously held, but each share will be worth $10. The overall value of the investor's holdings remains unchanged, just expressed in fewer units. The reverse split does not make the company more valuable, nor does it increase the likelihood that it will suddenly become profitable. It merely changes how the stock is presented. The same principle applies to redenomination. Without changes to Iraq's economic structure or external trade dynamics, changing the number of zeros on its currency notes will not alter the underlying value of the dinar in the forex market. So, if one is holding onto Iraqi dinars and hoping for a massive increase in value simply due to redenomination, they are likely to be disappointed. The focus should instead be on whether Iraq can implement deep economic reforms, secure regional trade partnerships, diversify its economy away from oil dependency, and increase foreign direct investment. These are the drivers that could lead to a meaningful change in the exchange rate. When and if those occur, then a redenomination might follow to reflect the new reality. In that sense, it's not the deletion of zeros that matters most, it's the conditions under which such a step is taken. To put it bluntly, if Iraq deletes the zeros before changing the exchange rate, it is almost certainly a redenomination rather than a revaluation. And if that's the case, currency holders should not expect a sudden increase in the value of their dinar holdings in terms of dollars, euros, or any other currency. In fact, many central banks explicitly state that redenominations are designed to be neutral in terms of wealth and purchasing power. They exist to simplify, not enrich. Therefore, it would be wise for anyone invested in the Iraqi dinar to hope first and foremost for a change in the exchange rate, supported by solid economic reforms and policies. That is the true measure of a currency's strength. The deletion of zeros, when done in the right context, may be a good sign, but by itself, it is not the goal. The real transformation lies in the macroeconomic health and monetary strategy of the country. Cross your fingers for an exchange rate change, not just a redenomination. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed and stay ready.